10-year note yields remain stubbornly low as uncertainty looms. Recall the recent uptick in yields, thought maybe we were going to try and make a shift back towards the old range, or the new old range, or at least higher than we are right now. Let's put it that way. And we didn't. We quickly saw yields come off again today as the headline news comes out that perhaps the agreements with China aren't set in stone. Perhaps there's going to be taking some more negotiating and things are going to take longer than expected. And I think ultimately the stock market took the lead on that, and bonds followed, and bond yields went back down, not near the lows that we saw last week, but certainly off the highs that we saw yesterday, and things starting to feel again like there's going to be another push towards lower yields, maybe even breach that 2% level, something that has been done in several years. So right now we are kind of hovering on those lows with the idea that perhaps we need some headline pushes in either direction. Buyers have reemerged, and they came out in full force today, and I think that ultimately those buyers are going to continue to be there until we get some clarity, and right now we don't have it. And if you look at market volatility in the Treasury space, it's hovering, kind of around. It's not really going up, it's not going down, it's kind of waiting for something, sitting very precariously. It's something that we look at when we're on the edge of a range. We either break out of the range and we see vols go up, or we trade back towards the midpoint of the range and we see vols go down. I think at this point the market's sort of waiting for that directional move. Will we see a move south of 2%? Will we see a move back up to 2.25%? I think at this point it's going to take some kind of resolution somewhere. And right now we don't have it, whether you talk about the U.S. and China trade, whether you talk about what's happening in Washington, whether you talk about what's going on at the Federal Reserve, which we will hear from later this month. And I think at this point, the market's going to wait and see cautiously and not get over its skis and expect the Fed to do one thing or another. Right now, the Fed is expected to cut rates several times this calendar year, but unlikely to happen in June. June will probably be one of those meetings where they tee up a rate cut for the July meeting, and then things will have to go as they may from there. Wait and see how the market reacts, because don't remember, 2-year note yields are still trading 50 basis points below the Fed effective rate. So there is a good chunk of cuts priced in right now. And as we move forward through the rest of this year, if growth doesn't pick up, if these trade issues start to really hamper the Fed's policies, whether they growth and inflation, things could change very quickly. But right now, 10-year note yields hanging on the lows and volatility holding steady. Now, one bit of news we had today with the auction, 10-year auction we got today, comes out with very, very strong demand, despite the fact that we are trading 35 basis points lower than last month's 10-year auction. So again, this is evidence that we continue to see buyers come out at these high prices, despite the fact that, yeah, maybe we could see a pullback, or maybe we may have seen a waning demand. We didn't see that. There was plenty of demand there for today's 10-year, as there was for yesterday's 3-year. And I think at this point, demand for treasuries will remain high as uncertainty continues to reign. And if equity markets can't get their sea legs back under them and continue to rise towards all-time highs, I think you're going to start to see more of that money come back to the treasury market that we saw briefly move into equity. So as treasury yields hover on the lows or just above the lows, we wait, and obviously we have a lot of Fed speaking coming up. Not only the July FOMC, but then in June FOMC, the July Humphrey Hawkins testimony, which will come out, has not yet been scheduled, and then we get a July FOMC. So there's a lot happening over the next several months. But today we're kind of waiting and watching, and there isn't any resolution, so we sit and we wait.